Hey everybody, it's Charlie here with the Charlie Wills team. All right, welcome back for our February edition of Market Stats and Updates. So lots of changes. Not much has changed to inventory other than more houses are coming available, which tends to happen. From March until about end of July, going into August, is probably our largest grouping of houses that come available for sale on a typical market cycle. So I think from now until then, we're going to see that increase. Now, it's not going to be what I would call a normal market, meaning where there's a balance of like 6 months of inventory. We're under a month of inventory under every single price point that's on the market. So all the way from 200,000 all the way to $1 million in terms of the price points. There is really not that much inventory for every single price. So anyways, we're still going to see competition. We're still seeing that right now. We actually just went live with the property last week. We had over 10 offers on that property, and it's going to go for probably anywhere from 10 to 12% more on there. So anyways, be prepared is probably the biggest message, that the market still exists that way. It's not being affected by the market in terms of like inflationary things. Actually, what's really happening, and some stuff I'll cover here in a little bit, is some big changes to rates. So stay tuned. So what we have for stats, prices are still elevating. They're still growing. They're still increasing. They're not growing at what I would call your overall, like last year grew about between 10 and 12%. We're probably going to see a 6 to 8% increase. So the increase isn't as substantial, but it's still increasing. So if you're going to get in here, whether you buy it in February or you buy it in August, you're probably just going to pay more for that by the time it hits August. Now, when we're looking at inventory, you have to be really clear about where you're looking at. If you're looking on a total market average right now for single family homes, price point is, or the median, I should say, price point for housing is $387,000. Condos is about $286,000. But again, that's the overall market inside of Dane County. Now, you go then specific to neighborhoods, it's obviously going to change depending on size, location, features, etc. So again, that's just a general basis. All right, market itself. About a week ago, so this is March, what is it, the 29th, about not even a week ago, probably 3 or 4 days ago, the rates dropped on a 30-year note, and even more substantially for 5, 7, and 10-year ARMs, substantially. It went from about 7% for a 30-year fixed down to 6%, and I've seen sub 6 in the last day or so on some lenders. So, anyways, humongous change. When there's a 1% difference, what that means is there's about, let's see here, over the total life of the loan, that would be about $75,000 different in interest that you would pay in that difference. So right now, if you bought the house a month ago and you closed for 7% and it's now at 6%, the interest that you're paying on that loan is massive over 30 years. If you go to a 7-year ARM, which some people ask, like, why do you go to ARM programs? 7-year ARM is at 5.2%, and I've heard people get it as low as 4.8 recently. So anyways, there's lots of movement in the market, and again, I'm not a market expert on economics or any of that stuff, but just kind of watching the chatter that's happening amongst the experts is a lot of them are stating that because of some of the bank failures that did happen, those were bond backed. They were very bond heavy. They weren't deposits heavy. And because of that, it's affecting that market. And when those markets get affected, the short-term mortgage notes, so like your ARM programs, tend to get better rates when those things happen because they want to drive up interest into those markets. So anyways, lots of information. Hopefully it's making sense. I don't think this market's going to go away. The pace is going to be there. There's going to be competition. No matter what kind of buyer you are, whether you're a first-time buyer or you're a veteran buyer, you're an investor, or you're a condo, or maybe you're downsizing and it's time to get out of your home. There are all sorts of things to learn and know about each one of those categories, and we're happy to answer those specifically for everybody's situation. But this is hopefully a good indication of like what is happening in the market, give you some ease to know the general rhythm. And then, with each of our clients, we tend to then focus on specifically their examples and then give them advice based on that. So anyways, if there's questions we can answer for you, post them here in the comments or direct message us through the app, or this will be also be posted on our social media. You can comment there too, or send us direct messages to our email, or give us a call. All right, take care. Thank you so much. Don't forget to hit the subscribe button down below and be available for our content every single month. All right, take care and look forward to seeing you soon. Bye.